Promoter entity ANI Tech faces another downgrade, and this time S&P Global has downgraded that rating to CCC minus from CCC plus with a negative outlook. Ritu is joining in with more on this. Ritu.
Well, after Moody's downgrade last month, now S&P Global Ratings has also downgraded ANI Technologies, which is the parent company of Ola Cabs. Now, S&P has lowered the company's issuer credit rating from CCC plus to CCC minus with a negative outlook. This, they say, reflects weakening liquidity and the risk of a financial covenant breach in the next 6 months. Now, S&P warns ANI's cash and equivalents are expected to fall below 200 crore rupees in the fourth quarter of this fiscal. And this is critical because ANI is required to maintain 40% of its term loan be in cash, which amounts to 240 crore rupees. Now, S&P expects that they will likely breach this covenant when it is tested on the 31st of March next year. Operating losses also continue to weigh on them. S&P projects that ANI's adjusted EBITDA loss will rise to 590 crore rupees in this fiscal, and revenue could decline by 25 to 27%. At the same time, its market share in India's four-wheeler segment has fallen to 20 to 25%, which is down from more than 50% just 2 years ago. Now, the agency notes that ANI Technologies also has limited ability to withstand continued cash burn without additional capital infusion, unlike its competitor, say Uber, which holds more than $6 billion in cash. So S&P notes ANI's options to increase liquidity, they too are limited. It has historically relied on equity funding, and there's limited record of bank financing. ANI also, keep in mind, holds a 3.6% stake in the listed entity Ola Electric, which is now valued at around 450 crore rupees after taxes. But selling that stake is also complicated by the fact that Ola Electric shares have been trading at an all-time low. Meanwhile, ANI has delayed its IPO plans repeatedly as well, and they hold nearly 19,500 crore rupees in compulsorily convertible preference shares, which represents about 95% of the adjusted debt. And S&P says if the IPO deadlines are not extended, the preference shareholders could exercise their exit rights, and that will add immediate financial pressure on the company.
All right, Ritu, many thanks for those details. Let's take another short break on that note. More news and updates on the other side. Stay tuned.
"26 years of CNBC TV18